2 or 3 years ago. And had you not come in and sold this house and closed on it, they paid those back taxes. They would have owned your house. So I really barely missed it. So I guess the lesson there is don't not pay your property taxes. Can that still happen? And can that happen in Texas? Can somebody come back and pay your old property taxes and own your house over a certain period of time if you fail to do so?
It's possible. It happens very rarely. Generally, the only taxes that, if you don't pay, can cost you your house are taxes to the IRS. They can put a lien on your home and take it without any issues at all. And there are investors who will look at these government foreclosures and go buy these houses for pennies on the dollar. So yeah, taxes are important. Property taxes, typically you have to miss a whole lot of property taxes before the state wants to get involved. And they will put a lien on the property so that the next buyer, if those property taxes haven't been resolved, will also be responsible for cleaning those up at closing. But yeah, you do need to pay your taxes. If you don't pay your taxes, theoretically, the state could come in and foreclose on your house.
Yeah, I think you could go 5 years in Texas and not pay your property taxes. They go up every year. Basically, when you go to sell the house, they're going to take them. So
yes, they will.
Yeah, but a lot of people, especially investors, they won't pay them. They'll wait until they can sell the property, and then they'll pay them all at once. So a
lot of investors are only holding the properties for very short periods of time. So you're probably right about that. If you're somebody who's buying a house, fixing it up, and then flipping it as a resale property, you're probably holding it for 6 months or less. It wouldn't surprise me if some of those people are just kind of biding their time and not paying the taxes and figure it'll go in the transaction. But that's also not a really smart move for investors because they could get themselves in some trouble too.
Yeah. Rick, really quickly, you all just released the latest housing risk report, and one of the things that came out of this report was Southern States dominate list of riskiest U.S. housing market counties in Q2 for this year. What can you briefly tell us about that? What people should know about this?
Basically, that report kind of determines if the economy slows down, if there's some sort of shock to the system, which markets are likely to be hit the hardest. And yeah, the southern region was one of the areas for that. We're seeing slowdowns in job growth. We're seeing slowdowns in population migration. We're seeing a slight uptick in unemployment. For example, in the Houston area, yes, unemployment rates running about 0.5% higher than it is nationally. So you factor all of those things in, including things like increasing numbers of foreclosures. Excuse me, and that's how Adam determines where the riskiest markets are. Doesn't mean the market is at imminent risk. It means that if there is something that happens to the local economy, those markets are probably the ones that will be the hardest hit.
And when you look at Houston and Harris County specifically, you talk about how it's unique, and we often hear that a lot about Houston, in that we saw the rise, but you were expecting another dip. What could cause that dip that you think could potentially happen?
With Houston, a lot of it still comes down to energy, and that constitutes a huge part of the local economy. The current administration, in Washington, seems very, very pro-energy. But if anything were to happen that, for example, energy prices plummeted because maybe of an oversupply suddenly of oil or gas, anything that could hit the energy market in a negative way is something that would definitely have a negative effect on the Houston area.
All right. Thank you so much.
Rick is the CEO of C.J. Patrick Company. Rick, thank you for joining us today on Hello Houston.
Thanks for having me.
Coming up, we'll talk about providing healthy meals for kids with...
Grand morning. I'm out running an errand. And that was talk radio for this morning while I run my errand. And they're talking about house foreclosures going up in a way throughout the whole country, and why that's happening now. And what's happening is, as you heard them on talk radio, is that insurance rates, insurance for your home, to insure your home, and property tax have gone way up, people. I know insurance rates have gone up, like everybody else who owns a home. My home insurance rate went up too. It went up. And I'm not happy with it at all. Like most people are not happy with it. And I shop around to find more cheaper home insurance, like I'm doing again this year. But the problem is, insurance rates and property tax have gone up so high, people who have gotten a new home within the last 3 to 4 years, and interest rates are through the roof right now. People who have bought a home in the last 4 years are paying 6.3 and above for interest rates, which is ridiculous. Ridiculous. It is ridiculous. You are getting robbed, in my view, if you're paying, I'm going to say it right now, my interest rate right now is 2.3%. 2.3%. If you're paying above 5%, you're getting robbed. That's just my view. That's just my view. The banks are robbing you. And the Fed chairman is the reason why the banks are robbing you. The Fed chairman over the Federal Reserve Bank is allowing the banks to make billions and billions of dollars off these home loans. That's another reason. But back to the insurance. The insurance companies are crooked. They're charging way more. The people who are losing the most houses due to high insurance rates are in Florida. Florida has the highest insurance rate in the country. Florida, number 1. California, number 2. The highest 2 insurance rates in the country. The insurance rates have gone so high in those two states that people can't afford their homes no more because they can't afford to pay the insurance on them. In those states, their insurance has tripled, almost has doubled and almost tripled. That's crazy. But I wanted to share that with you. To buy a home right now, with these high insurance rates, the property tax is going way up too. Man, has it gone way up. With the insurance rates, the property tax is going up, and the high finance a home, man, it's getting almost impossible to buy a home now unless you're rich. You guys have a nice day. At the end of the day, we got to take care of ourselves because ain't nobody else going to take care of us.